Okay. Hello. All right. So today we have AI stuff, which is pretty cool. We have some game theory, which is also pretty cool because that'll make you, well, it will help you endeavor to make better decisions. And let's see. What else is exciting? I mean, price-wise, everything is kind of still quiet. Bitcoin is maintaining 30K. Woo woo. So let's do this. Let's get into our AI news first, since AI is gobbling up the whole planet. So right after our non-commercial breaks, we will come back. Hello. We will talk about AI. And yeah, we will go from there. So that'll be fun. And our game theory stuff is interesting. We did I have a payoff matrix for looking at the risk reward of investing short-term versus long-term, which is very interesting. Boop, boop. There is actually algebraic evidence that short-term investing is just a dumpster fire. And that's assuming you have all the information. You don't want to see the one I did if you compete against AI. It's just you just light all your money on fire. Morning in the middle. Well, it's still technically morning, right? Good middle of the night. That's kind of morning. It's somebody's morning. All right. So on that note, off we go to our commercial, non-commercial break, and we will come back and we will do some AI news and we'll go from there. Woo woo. Okay, so every day there's tons of AI news. It's tough to kind of sift through. I use about 3 or 4 different newsletters to kind of find out if I see consensus, like a lot of people agreeing on what's the cool news, then I assume that's the news. Well, at least the news that maybe you might want to hear about. So today we're going to talk ChatGPT unleashes a mobile service, which obviously, first of all, you have the ChatGPT you can put on your phone, right? You have the one you could log into, browser-based. I use this one all the time. It's badass. But some of you may want mobile search. Go on. Well, that's a thing now. So that's kind of cool. So ChatGPT, the app, unleashes mobile search via Bing. So ChatGPT now lets ChatGPT Plus users use Bing's web search on iOS. For $20 a month, ChatGPT subscribers on iOS can now activate Bing real-time browsing via Bing to get questions on recent topics and searches and events and all this kind of stuff. And this is way better than the free version, only because the free version stops at 2021. So if the knowledge of all of humanity that's ever been made available up to 2021 isn't enough for you because you're a persnickety SOB, well, then I guess you need to pay $20 a month. Another one that you may look at is Poe. Poe is pretty cool. I've only been messing with it a little bit. There's like a free membership you can get for like 7 days, and then of course, but it only ends up being like $14 a month, and it actually leverages GPT-4 as well as some other language models. I've been relying mostly on GPT-4 through ChatGPT Plus, but you gotta use what you feel most comfortable with. Anyway, it's kind of interesting. So for those of you that want to up your game, if you're using ChatGPT Plus, which again, you can have it like, I'll show you, it's like the app. It's right here. It's this one. Let me see if you can, I don't know if you can see that. It's that one. I don't know if the camera There it is. You see it? You see it right there. Yes. And it's it. You click and you can use 3.5 or 4. There, it's wicked. It's really good just for like any question you have, go there first. Then give it a Google. But you got to start there. All right. Okay. Carrying on. Well, there's all sorts of apps and stuff. I worry about pointing people in the direction of apps. Plugins, yes. So go whenever you're banging around and you want to figure out, okay, what's the best, plugins to enhance what I'm doing, especially if you're in a specific field of business. Look at the plugins. So you would just go, you can, it's weird that you can Google it and it'll get, but go look up, and I would Bing it probably. Bing seems to have more efficacy. Although DeepMind and Google are buddying to launch Gemini. We don't know when Gemini releases. I think it's like early, and a few people will get it. And then eventually Gemini will roll out. And I watched a report yesterday where this data scientist kind of talks about why, well, he was listening to the CEO of Google wax on about how awesome Gemini is going to be. And it seems like it will be better. And one of the main things is the ability to plan. And you think, well, planning, what is that? Who cares? Okay, so just the way to kind of envision this is you have two models. One model that you give it a prompt and it just goes off on a timeline. It goes off and starts making this next word prediction based on a big giant pile of data, as we know, which is two things. It is parameters, right? So we know that there's a difference between parameters and tokens. And real quick, just so everybody is on the same lingo, parameters are the model's learnable components. Tokens are the units of text or semi-text, subtext that the model processes. So the number of parameters determines the complexity. The number of tokens affects computational requirements, like hardware requirements, and then the sequence length limitations. Okay, so we got that. Yeah, good. All right, so we're all in the same. Well, what Gemini is going to be able to do, other than going down a timeline, it's going to be able to play out a bunch of different. So basically, what they're doing is using large language models, and then they're putting in some of the deep learning and some of all of the work that they've done on AlphaGo, which looks at a bunch of different scenarios while it's playing a game. And so instead of going down a path and potentially hallucinating and coming up with some weirdness, what this will do is it will go a few steps on a variety of paths. And based on that, it will start planning and figuring out what's the best path to proceed to return your response. That's pretty cool. Although, again, I don't think that's magic. I think that these are easy. Well, we're just going to have to see. It doesn't mean for me that Gemini is going to be the best thing ever. I think that when we get to that point, I mean, obviously GPT-5, Sam and company, they're thinking about the idea of kind of running many scenarios. Even if you go back in the day and listen to AI scientists talk, the idea is to be able to run many simulations all in real time. I think the main bottleneck is either hardware to run all these transactions and the underlying internet protocols to run them in real time so there's effectiveness so that we can actually use them. So we're going to get to a technology meets hardware, basically a software that is more capable than hardware bottleneck. And that's, again, why I like AI-based infrastructures like Hypercycle, like TrueAGI, like a lot of the work that they're doing over at SingularityNet. And again, it's not the only thing that's making the world better. It's just the thing that we can invest in materially, because you can't invest in OpenAI. And having some weird, kind of vicarious investment through Microsoft or Google doesn't make a lot of sense, because right now that represents just a tiny portion of what your invested dollar would equal. Anyway, long story short, Gemini looks interesting, but I don't think that Gemini is groundbreaking. I think it's using a lot of the stuff they have already developed at AlphaGo. But again, coding is no longer a skill that's all that valuable. Software engineering is being able to come up with cool stuff and take these mental leaps. But just coding, that's a dummy task that you can get GPT. Any of the large language models can code. So coding is the thing of the past. So anyway, I just don't think, I come back to the thing, is what you're doing in the AI space a feature or is it a new direction in AI? Well, my guess is most of the new directions in AI will become up the scientists and engineers, but the features, everybody will have them. Like the moment anybody has a feature, everybody will have that feature. Hence the plugin store, which every day when a new plugin comes out, 1,000 companies go away. Every plugin equals 1,000 companies probably that no longer exist, which is another thing. If you find yourself investing in features disguised as companies. So as an example, would anyone here invest in a company that does voice cloning? We clone voices, invest in our company. We make avatars that talk with those same voices. Is that interesting to anybody? Not to me, it's not, because that's a feature. I'm not investing in features. Everybody's going to have, oh, this is a photo that disappears. There's nothing magic about that. That's a freaking feature, bro. Anyway, it's a lot to think about, but we're trying to reduce all this to make it investable. That's the key. How can I meaningfully invest in and around the AI space, in and around the digital asset space, and multiply my pile of cash the most? I mean, that's all you're trying to do. And don't compare yourself to the Joneses. Compare yourself to yourself, your portfolio right now, this second, versus your portfolio 12 to 18 months from now. Anyway, okay, let's keep it going. AI accelerates drug discovery process. Go on. So in the world of AI and healthcare, in silico medicine, which is a premier member of NVIDIA's, they call it Inception, which is a little bit creepy. And that's NVIDIA's startup accelerator, is cutting costs and time in drug discovery using generative AI. So their AI-led candidate designed to treat a rare respiratory disease is zipping into phase 2 trials just 2.5 years after the project's inception, usually a feat that takes 6 years and normally about $400 million. Yeesh. So so think about that. If something costs $400 million, how many humans do you think are grabbing at that chunk of $400 million along the way? All those people would be gone. All those people would be disintermediated to a very small group of people, and the heavy workloads being run on the software, and the software is relying on, right now, narrow AI, but very powerful narrow AI, and getting more powerful each day. Adobe eases AI art fears. A bunch of people are like, no, man, this is crap. AI's doing my job. Yeah, well, man, it is. So if you're great at Adobe, you'll be greater now that you have these features. So anyway, the AI art scene has slowed down recently due to large amounts of fear towards specific legal concerns around permissions. Adobe understands this fear and is now offering to pay copyright claims for works spun by its generative AI tool, Adobe Firefly. This is a move that could be the catalyst that sparks kind of wider commercial use of AI-generated art. You're like, okay, cool. If I generate something from something, somebody somewhere gets paid a little commission. That's fair. It's kind of like TV royalties. You wrote a show, you get some, I get it. Anyway, so it seems like that's going to allow another group of businesses. For instance, if you're a business and you have, creative artists that work for you and marketing, the time to get a design out into the marketplace now is a few minutes from a few weeks. That's a big difference. When you want to go to market with some kind of marketing strategy and you can do it instantly, there's a lot of value in that. So anyway, yeah, so that's kind of cool. There is a thing called TLDV, which is a transcribing service. So it's like TL:DV altogether, if you just look it up. And it summarizes and marks key moments in meetings you might have in 20 different languages. So that's kind of cool if you're still, for those of you that still work. I don't know if anybody still works, but whatever. Respeecher Marketplace allows you to speak in another person's voice, preserve the emotions, the volumes, and the emphasis. Again, we're talking about like voice cloning. Voice cloning in and of itself is not enough, in my opinion, to be a business. Some voice cloning crap with avatars raised $100 million a few weeks ago in Europe. Europeans are, you know, they're clearly not as discerning investors, but these jackwagons, and you're like, that's a feature. Everyone, I mean, that's just a feature. Whatever, God. Anyway, Good Meetings. It basically shares AI curated moments and summarizes for more productive meetings. You notice a lot of this is like meeting and business based because, you know, businesses are still, for the meantime, going. Did you guys know that a company, there's a company in India that appointed GPT-4 as their CEO? Yes. Yes. Not kidding. Anyway, that's pretty cool. Okay. There's a lot of other tools. Look up, I'll tell you what, look up Super Tools AI, and it has a bunch of AI tools that you could use for yourself or for your business. Okay. AI pushes in China. So the Chinese are very forward thinking. You know, let's not talk about their politics, but they are aggressively harnessing the power of artificial intelligence, aiming to be the world's leading AI nation. China seeks to capitalize on artificial intelligence in the areas of daily office work, pharmaceuticals, meteorology. I mean, weather predictions, big country, very agrarian. So, I mean, understanding the weather would be very valuable. This should impact production and, you know, like the day-to-day lives of the average Chinese person in a valid way. It also gives them a lot more predictability on the goods that they export and what they might need to import. Anyway, kind of cool. Microsoft launches AI Skills Initiative. Microsoft announced a new AI Skills Initiative to bring the gap in technical skills in the workforce by providing free online courses, a global grant challenge, and a teacher training toolkit. So if I were you, I would be, if you don't know anything about AI, you haven't banged around with any of these services, and you're just like, it's uncomfortable. You can go learn. I mean, Udemy's got courses. There's little basic AI courses all over the place now. Coursera probably has some. This particular initiative for Microsoft, it's connected with Azure, LinkedIn, GitHub, and other Microsoft platforms, and it will basically, it will be like a whole kind of coaching training center. So it's kind of cool. There's a new AI that is detecting early lung cancer that's missed by doctors. Scientists at the Mass General Cancer Center and the Massachusetts Institute of Technology, MIT, in Cambridge have developed a new AI tool named Sybil. The tool accurately predicted an individual's risk of developing lung cancer within the next year with a success rate of between 86 and 94%. Now, that's the first study, but my guess is two things. One, the efficacy will go up, and two, they will do broader studies. That's a big number. I mean, if it was 51%, you would check it, right? If it improved predictability, because with cancer, the earlier you start fighting, the better, period. Cool, man. Okay, so that is that in the basic AI. There's like an even more in-depth, there's a bunch of newsletters and stuff you can get involved in. But anyway, there you go, kind of cool. Okay, let's look at markets, and then let's get into some game theory. How about that? I don't think it's going to, so I don't think AI is going to put pharmaceutical companies out of business. Someone still has to do testing. Someone still has to, use a syringe and take something out of this Petri dish, put it into that Petri dish, like look at it. So there, all of those steps along the way might be automated, robotized, Humans may be taken out of the lab, but until we can completely map human biology and then truncate that time, and there's still a lot of things in biology that, at least right now, are mysterious. Now, that too will go away pretty soon. But once we can map biology, then we could run, trillions and quadrillions of evolution experiments in real time, truncate that timeline to just a few, thousands of millions of a second, and then have that data build on that data, build on that data. So my guess is human knowledge and understanding of biology is going to look, the arrow going up is going to look like it's going backwards. It's so straight up. And you'd have to get real close to see that it's still at an angle. But I think life is going to get a lot better for many people. But if we're honest with each other, life is going to get better for rich people. Life is already pretty good for rich people, but it's going to get better for rich people. But then that will propagate down. And hopefully, as we make that move towards benevolent, beneficial, triple H AGI, which is helpful, harmless, honest, generally intelligent agents and superintelligence, they will, want to more evenly distribute the happiness and abundance and well-being. We'll see. We'll see who gets there first. Okay. But it will definitely reduce costs. Yes. Poor people who just stick their hand out. Well, yeah, I hope. Look, I don't think anyone on earth would argue that everybody has the right to be either as healthy or as unsick as possible. Like, no one deserves to be sick. No one deserves to have a curable disease. There's people all over in third world countries, just like Mexico, where I was last week. Well, I was there this week, actually, 2 days ago. There's people that are dying of perfectly, clearly curable diseases. Like, I'm not going to go off on the list. There's people that are suffering, dying from malnutrition, food insecurity, things like this. That's all solvable. That's an economics issue. I don't know if anyone anywhere who's like not a total dick thinks that, well, some people just deserve to be hungry. That doesn't make any sense to me. So I think AI is going to make life a lot better for a lot of people. And the edge cases, that's going to be tricky. Well, you know how to make sure you're in the best position. Just be rich. But instead of again, rich is a mindset. Be richer. How about that? And what I mean by that is work your way to some amount of continual passive income that gives you a cushion. And then don't live out of your goddamn means. Don't be one of these people that scales your life to your paycheck like a dumbass. If you make this amount, live within this amount. Don't extend your debt out to here like a dummy. Like, unfortunately, like 9 out of 10 Americans do. I gotta have a bigger house. Why? Because the person next, because no one will think I succeeded. What do you care? How about be happy and eat cool things? I don't know, man. I like eating cool things. That's like wealth to me is being able to go on cool trips, eat cool things, and either climb stuff or go into caves. That's wealth. I saw these toucans in a cave. I saw those, not toucans, but like, they look like toucans. I forget what they're called. They're kind of the very colorful ones. Anyway, the parrots, but that are really colorful. And they were in a cave. And then there was, in the same cave, I saw those toucans. I saw a bunch of weird fish. Because there's water. I saw a vulture. And I think it was a hawk, or maybe it's just a weird brown vulture. And flamingos in the same cave. And like within arm's reach. Not kidding. Same cave, within a 10-minute walk, all in the same cave, about 40 feet down. Crazy, man. Anyway, yeah, go down the Titanic. All right, let's look at markets, because, how else can we invest if we don't look where to invest? All right, let's take a quick look at markets. I'm not going to tell, as this is a kind of more public stream, I'm not going to say anything to buy, don't buy. That's a digital heavyweight thing. For those of you that are curious, I'll play my little digital heavyweight AI thing. We go into depth in the digital heavyweights about this stuff, like actual, like maintaining portfolios and kind of what I'm buying, what I'm not buying, and all that kind of stuff. But what is still more important is the why. Why is someone doing this? Why is someone doing that? And I'm just one voice among many. The difference is, in my case, I actually made money in the crypto space. On many of the ups and downs, I didn't make money once, and I also invest in this crap where most of these douchebag gurus, which I am not, by the way, I'm not a guru or any of that kind of crap. I'm just a dude who made a crap box full of money investing in the crypto space. But you know what? I made a crap box full of money in the precious metal space before I touched crypto. I just didn't trust crypto. I didn't trust digital assets for quite a while. It took me a bit to come back around to it. Anyway, gold 2.0, which we call affectionately Bitcoin, 30,600. It's half a point, which is nothing. These percentages in the crypto space are nothing. And that's why we're probably here in the digital asset space, because this is the only place where the real multiples are. You can't, I don't have anything against the equity space, except that people lie, cheat, steal. You don't have any access to information. You're investing when seed and early round investors are on their way out. You are their exit liquidity. And by the way, it's completely asymmetric in that they have information that you don't have. If you're okay with that, then by all means, equity is for you, unless you actually want to make multiples. And I don't think that there are multiples left in the equity markets, because if everybody's indexing in, no one's getting ahead. I could get into passive indexation and all these kind of weird effects of kind of mass investment, especially mass investment through a kind of controlled like distribution engine, which are like these large funds. That's a whole other thing. But the reason I keep coming back to the digital asset space, and especially the AI space, is it's the only way I think you can get into these assets that can return many multiples. That's why I want to be here. I want the multiples. Why is Matic taking a hit? There's not any one reason. The entire market's taking a hit. Matic also has a bunch of partnerships that have not really yielded fruit. So they're starting to look a little bit like Chainlink, except that in this case, Matic, the token there's a use for the token, whereas in Chainlink's specific case, there's no use for the token. Everything that Chainlink does, the oracles and the trust, all that's possible without using their token. You could just use Ethereum. There's no reason for the Chainlink token, so it doesn't pass the Y token test, right? You have to ask yourself, like, part of the 5 T's of analyzing these assets is, why does the token exist? There is no reason. Well, it's to enrich the early investors and founders and developers of Chainlink. That's unfortunately the case in many of these assets. It's even probably the case with XRP. And you know this because the company Ripple is doing everything they do, and they're not using the XRP token due to the lawsuit and all this kind of stuff. So all of you that are like waiting for the great reset, you've already seen it. They just reset Ripple from using XRP on the XRPL to not using it. So if they can do everything they can do without using that token, Why on earth would that be the token that's going to be part of the Great Reset? It doesn't make sense. You need to really think about that. And I know a lot of people are emotionally invested. Listen, there's emotional Bitcoin zealots and emotional Ethereum zealots. All the early investors, the hedge guys that don't really understand crypto, a ton of them thought, I missed Bitcoin, so I'll buy Ethereum because it's the next one. That's a flawed argument. Ethereum is a commodity. Bitcoin is kind of like a savings account that you hope would outperform inflation over time, which again, it has over time. But in the short term, no, and neither does gold. So thinking that Ethereum is Bitcoin Lite or Bitcoin 2 is stupid and flawed, and it's just very lazy, broad stroke, general stupidity. So these people that are like 20,000 Ethereum because of Bitcoin, no, that's stupid. It's stupid. Anyway, however, prices can do anything. You get a bunch of compliant individuals and some compliant media like CoinDesk. What a dumpster fire that thing is. You get a bunch of compliant media idiots, sentiment, Twitter, excitement, enthusiasm. People will do all sorts of stupid crap. Just go look at the stonks and all the meme BS from 2021 if you want to see what stupid people will do. Pepe coin, Doge coin. What will dummies do? So it is important to kind of keep in mind that the dummies abound. Anyway, Bitcoin's not doing much. I always look at Bitcoin first, and then I compare everything else based on Bitcoin. Matter of fact, one of my apps, it always shows everything compared to Bitcoin's performance. So this is what I look at. And if Bitcoin's, basically it's at 0, it's a half point. So it's nothing. And look, nothing. Everything's kind of close to nothing. You have to keep moving to find anything really interesting. Near is giving up some of the ghost. Why? Oh, because the partnership with Alibaba means nothing. It means nothing. All these partnerships, they are not real partnerships. The only real partnership I've seen lately is HyperPG, which is Hypercycle and Penguin. Because why? Because they started a new entity called HyperPG. It's a company. There's not nearly Baba or Aliir or. So it's just like, that's why I just don't get excited about these partnerships. They never bear fruit. Algorand, quiet. All these things are pretty quiet. Again, the further you get out, a little bit more volatility you shall see. And then we got to get all the way. I mean, it's all quiet, man. It's all quiet on the Western front. So I'm not terribly price excited. Although the good thing is when you see it quiet, it's very investable. The global perspective is, man, it is, we are in deflationary money. We are in a clear recessionary environment, like clear, like obvious, beyond dispute, beyond discussion, like, and you need to have, I think you need to have the recession mindset. So what is the recession mindset? Really quick, and then we'll go into our game theory. You need to have some portfolio diversification, right? Well-diversified portfolio can help you manage risk during a recession. If your portfolio is heavily concentrated into a single industry or asset class, which is why even in the crypto space, we do want to kind of have a smattering of layer ones, some layer twos, some AI exposure, things like that. But if you're not, if you're too heavily concentrated and that sector gets beat up, you get beat up disproportionately. So I know that sometimes we're like, I think this is the best one right now, or this is the best one. You got to kind of get away from that. Company health, the financial health of companies right now, like you have to try to take that into account. And it becomes even more critical during a recession. Companies with a strong balance sheet, maybe less debt, consistent revenue streams are better equipped to weather, economic downturns. Job security, if you are relying on a regular income from your job, like to invest, you need to consider your own job security. And you need to think, okay, during recessions, that leads to layoffs and wage cuts, which can impact your ability to invest. So I do like interest-bearing assets. I like some of the things. I like participating in networks that pay me a yield. I like, if you're going to give me 6, 7, 8%, I like it. If you're going to give me 2 or 3%, I'm not going to run after it. It's not worth the effort, because in the digital asset space, especially as it relates to AI and digital assets, that's not enough. Is anyone staking or farming hypercycle? Well, it's not. Staking would be a kind of the marketing staking that you're doing on the unbonded staking at Singularity DAO, which pays like 30%. So yes, I think a lot of people are doing that. And the farming is not called, if you're talking about yield farming, I did mess with that, Mark. I messed with it for just a little bit. I didn't see it being that valuable. It wasn't that exciting to me, but it may be exciting for some people. I just realized I'm not a yield farmer, man. I just don't have the yield farming thing. Okay, pay attention to market volatility. Recessions come with increased volatility, especially in this anemic crypto space. You need to be prepared to see big swings in your portfolio and not throw up every time that you see that. Because that can, if you're emotionally attached to your investments, that leads to, well, poor investment decisions, right? Interest rates. Okay, central banks and the Fed. I say and because the Fed is not a central bank, but they will lower interest rates typically in response to recession. But right now they're fighting the inflation monster. However, there's a strong argument that raising rates is actually easing, and cutting rates is actually tightening. That gets into a whole tangent. We did a whole show on that. Anyway, inflation rates mostly affect borrowers, and most of it has nothing to do with us. Meaning it affects, they're trying to elicit a response out of banks. And the idea is to get banks to free up cash and credit. But all these banks, the central banks and the Fed care about right now is fighting inflation. They think raising rates fights inflation. They're idiots. A Phillips curve doesn't manage an economy with millions of inputs. You can't use non-monetary policy as your monetary policy. Unless you affect money, it's not monetary policy. So we can skip that. Inflation can be a concern during or immediately after a recession, because governments respond to recessions by, well, typically printing money. But there's different ways they may do that. And again, we're not going to go down the path of what is monetary policy, but if they actually print, or if we go to like a UBI or something like that, you could have periods of higher inflation down the road, which can erode purchasing power and investment returns. And the government does print money into existence. They do it. That's not what this is. We're not seeing that, but that is still happening. So whatever, we're kind of in deflationary money world. And then behavioral biases. So when you have market uncertainty, investments tend to be driven more by emotion than by competent decision-making. I feel that a lot of people make more emotional decisions than they do decisions based on concrete game theory and assumptions, which is one of the things that, like, why the digital heavyweights is heavy game theory, heavy cognitive bias. Anyway, you can make a lot of investment mistakes, like panic selling, getting overconfident in really risky assets. And just, I think the key to recession investing, as for any of you, forget about crypto for a second, is have a long-term perspective, stay disciplined, avoid making hasty, emotion-based decisions on short-term market movements. Don't look at the last week, the last 24 hours to make your decisions. That time will lie to you, right? Don't put the blinders on. And it's beneficial. If you don't know something, hire someone who does, right? Like, you know, or, well, I say that, but then again, you probably get a pretty good idea with ChatGPT. Keep these things in mind. I mean, there's a lot in the world of investing. I think it's better to be a long-term investor. What I want to do now, why don't we do this? Let's take a quick minute to talk about the game theory of short versus long-term investing. And this isn't really a crypto-specific thing. This is an investment-focused thing. This is why, again, you'll notice if you're watching like Money Morning Live and a lot of these other things, traders go away. I don't mean like go away. Like, I'm not telling you to go away. I'm saying traders statistically get beat up. You're fighting against forces you can't beat. You're fighting a battle you can't win on information that doesn't work. It doesn't backtest. You can say what you want. Math, because math, you're wrong. You can occasionally win in the short term by making certain trades. Sometimes investments become trades if the information changes. But trading based on charts and patterns that are backwards facing is no different than being in a race car and driving the race by looking at the rearview mirror. And you'd be like, well, that's stupid. Yeah, it's stupid. The other thing is you're trying to outwit, outsmart, out-intelligence large language models with all of the information all of the data that has ever existed. And you have a squiggly line. Oh, it's an up arrow. It's time to do. Come on, bro. Come on, buddy. Come on, guy. Stop it. You're embarrassing yourself. You are some algorithm's profit margin. If you're a trader, you will eventually lose your money. You may use that as a lesson to become a longer term investor, but you will absolutely lose your money as a trader in the long run. But you might say, no, let's reduce it. Let's keep it, don't be so vitriolic. Let's keep it more game theoretical. Fair play. Fair play. So let's think more theory-based and less cash in hand based, less balance sheet based. So in order to do that, we're going to do some game theory. So let's give it a look.
Yeah, well, that's just like your opinion, man.
So let's look at the game theory of long-term versus short-term investing. And I went ahead and threw in the our payoff matrix. For those of you that don't know what a payoff matrix is, in game theory, you can reduce complex situations where there's any kind of strategic interdependency and you have a set of rules. You can reduce it to a payoff matrix and you can just reduce everything to math. I like reducing things to math because it takes most of the whimsy away. So this is an example. This is a two by two payoff matrix for two investors, investor A and investor B. Their choices are long-term investing or quick trading. I'm also not assuming that you're playing against AI. If you were going against AI, you're going to get absolutely smoked. So there is no quick trading scenario where you competing against AI, you come out on top. I'm just assuming there's no AI and no algos, which we all know is the case, right? Anyway, so these numbers represent potential profits, but keep in mind that obviously like real world investment scenarios are much more complex with numerous factors affecting their outcomes. One of those is the compounding interest effect of many long-term investments, the tax implications of short-term investing, short-term trading. I mean, you look at taxes and fees, like quick trading, you absolutely get your ass handed to you. But most people just cheat on their taxes. So there you go. All right. So if you're looking at the payoffs, and I'm going to explain this in a second because there are kind of these four kind of metrics that I look at, which is compounding effects, risk management effects, costs, and then like the actual time and effort. So the payoffs, the way the matrix works is the 7-7 box is if both choose long-term investing, they avoid the potential risk of frequent trading, and then all the fees associated with that. They achieve stable gains. That would be like 7 units. This is not dollars. This is not money. This is just 7 prosperity units, we'll call them. All right. We have to find a way to score these things. And that's what game theory allows you to do. The second, the box that you have the 3-9 box and the 9-3 box. So if one chooses long-term investing and the other chooses quick trading, the quick trader may potentially gain more on a quick trade, 9 units, right? You could hit it right by taking advantage of market volatility, while the long-term investor would gain less, 3 units in the short term. They're sitting back. They're on the couch. They're relaxed. They're playing VR because they've already made their investment. They have a longer term, so they're just chilling. If both of them choose quick trading, they might achieve modest gains, 5 happiness units each, but they also expose themselves to higher risk, taxes, costs, like go down the list. So This is an extreme oversimplification, but we're not talking about money units. We're talking about the total amount of benefit, right? So it illustrates some of the dynamics between different investing strategies. Nash Equilibrium, right? And say, what is that? Well, that's the situation where no player has an incentive to deviate unilaterally from the strategy. This occurs when both of the players choose long-term investing or both choose quick trading. However, the payoffs for each strategy vary pretty significantly depending on factors such as market conditions, individual risk tolerance, investing skills, timing, and the fact that you're playing against AI. When you factor that in, the only Nash Equilibrium, well, the Nash Equilibrium is the 9-9, is the first box, the 7-7 box, right? The long-term investing box. If you compare it, if you factor AI, it gets really ridiculous what the difference is. And long-term investing is a very obvious, like you must make that decision. However, on average, long-term investors tend to make more money over time with less emotional stress, less actual work. This statement is backed by, a bunch of studies and historical data. There are several reasons, I think, why long-term investing usually outperforms short-term trading. And again, I think you should put it into compounding effects, risk management effects, costs, time, and effort. So when you say, okay, compounding, long-term investments have the advantage, especially in the crypto and digital asset space, of getting compounding returns. So when you hold an investment for a long period, the returns you earn can also earn returns. So the money makes money, right? Your investment becomes an employee, right? Like it works for you. The other thing is you're not getting crushed with fees and taxes. So you have a reduced tax burden down the line and you can borrow against that. You really want to get sketchy. Is it sketchy? You can put all of that into a trust, borrow against the trust. Oh man, there's all sorts of, anyway, long story short, compounding. 2, risk management. Long-term investors have the advantage of compounding returns, which is cool. But on the risk management side, long-term investors are typically better able to weather market volatility. Short-term traders are more exposed to daily fluctuations. They tend to take on leverage, which leads to not just losses, but leverage losses and a bunch of tax losses and a bunch of trading fees. So like, come on, man. Short-term trading, if you're thinking about just the costs part of that, short-term trading involves much higher costs, trading fees, taxes, specific software, emotional costs of like having to ride that freaking roller coaster every day. These costs can eat into your returns over time. Obviously, they eat into your free and spare time. In contrast, long-term investing involves fewer transactions and therefore lower physical costs, tax costs, and emotional costs. And then that's when we get into kind of time and effort. Successful short-term trading requires a significant investment in time and often stress, relearning new graphs, new software, new cheat sheets, and all this other bull crap that you have to get a hold of, and hope that your trusted source, which by the way is someone that's probably not actually trading, but making money off of selling you the information of how to trade. I mean, think about that for a second. If you had a trading system that always worked, why would you sell it to anybody? Why wouldn't you just sit in a basement and spin off cloud cities? Like common sense, fellas, felons. Remember that commercial, that Dr. Scholl's commercial? Are you gelling? You're like a felon, and then they like immediately nixed it. Oh God, it was so funny. Anyway, so on the time and effort side, successful short-term trading requires a bunch of investment of time, stress, knowledge, education. Are you with the right guru? Is your trading software? All this kind of crap, right? It requires a substantial knowledge and understanding of technical analysis, which is always changing. Long-term investing, on the other hand, is effective with just a basic understanding of fundamental analysis, does not require constant market monitoring, movements, nip and tuck adjustments. Now, this doesn't mean that short-term trading cannot ever be profitable. Obviously, people go to Vegas all the time and they do good. Most people don't, which is why Vegas keeps getting bigger and brighter, even though it's in a desert. Those casinos are not making money and keeping the lights on because all of you clever traders are taking them to the cleaners. So while some traders might make substantial profits, it is random, it's typically harder, and it involves a lot more risk. It's also worth noting that the best strategy can depend on a bunch of individual factors, like emotional things, like your own risk tolerance, your financial goals, your time availability, market knowledge, a bunch of things that may not directly be sold to you in the software or whatever you're trading against. It's nuanced, but it's just a lot more emotionally demanding. And if you get everything right, you're still playing against robots, right? So there you go. And just for those of you that were curious, if you add in the robots, if you add into this payoff matrix that both long-term and short-term investors are trading against AI algos and trading softwares, the long-term investing from A and B goes up to 9 and 9, and the short-term goes down to 4 and 4. So you get absolutely flummoxed. And the Nash Equilibrium on that is the same thing, long-term investing. So, if you don't, I don't know how to tell people this, but stop trading. Stop. And stop paying people to tell you to trade. Just stop. It's all bullshit. You really need to absorb this. I don't know how else to tell you. Anyway, so yes, perfect, Mark. That's a perfect final statement. The big money is not in buying and selling, but in the waiting. Just do your research, aim, fire, and wait. Don't aim, fire. Come on, man. Anyway, let's call it a day. Remember, we do a lot of this stuff in the digital heavyweights, which is really fun and cool. And I think I even have my do I have my digital heavyweights thing? Let me see. My AI. Yes. I'm going to play my AI thing because it's badass. And because I made it on AI. Woo woo. Let's see. Do you want to get ahead? We have a program that really dives deep into investment management, game theory, cognitive bias, and the connection between cryptocurrencies, digital assets, and artificial intelligence investing. It's called Digital Heavyweights, and we do 3 private educational streams per week. You also get up-to-date news and research created by a team of writers and analysts that curate data from my personal investment portfolio. We do the heavy lifting for you. Join me and hang out with us Mondays, Wednesdays, and Fridays in the Digital Heavyweights. I know that sounds super rednecky. I'm still not sure why it sounds rednecky. God, I'm working on that. There you go. I got to train my voice model because it sounds like a dumb hillbilly. But you know what? If that dumb hillbilly was a digital heavyweight, he'd probably be a rich dumb hillbilly. I know that.